Actually, it's very difficult to give you an update on CapEx on a year-on-year basis, but probably it's around 15 to 20 crores so far. But most of it will be
existing vertical.
Sorry?
This 15-20 crores will be incurred towards the existing vertical?
Yes.
Okay. And like we see that there is no significant capacity addition on a sequential basis. The capacity remains at 291,000 tons. And so when will the new capacities be added during FY25? So around 50,000 tons is the target. So when can we expect it?
So you can expect in this quarter itself, as we speak now, our aluminium capacity in Ghana is being installed. So hopefully in a couple of days you'll get a news about that new capacity also. And then we have various new capacities lined up. We have increase in capacity at Mundra and other plants also. So it's in line with the total capex plan.
Okay.
So hopefully next quarter you'll hear some capacity increases.
Okay. So next is that our capacity guidance for the next 3 years, the capacity is growing at a 19% CAGR. However, we are guiding for a 25% volume CAGR. So if I assume the guidance to be achieved, our capacity utilization at that level would be around 72 to 75%. So, is it possible for us to operate our plants at that peak utilization levels, or what is the peak utilization levels that we will be comfortable with?
Yeah, peak utilization level should be close to 75 to 80%. So even we should be close to 75, between 70 to 75% even after this growth of 25%.
Sure. Okay. And I guess you have answered my next question earlier, but if you could just repeat, if the aluminium EBITDA per ton, which is around 19,000 rupees in this quarter, is that sustainable for the year?
No, actually, the sustainable number for aluminium recycling is around 14 to 16 rupees per kg. So you will have some variation till the time that hedging mechanism is in place. So you will see some quarters where you will get more EBITDA numbers, higher EBITDA per ton numbers, and you will have some quarters where you will have some lower EBITDA per ton numbers. But hopefully in this quarter itself, we'll have this mechanism in place. On the other hand, we also, as I mentioned, we also have this agreements in India now, which will work as a natural hedging mechanism for us. So you can see some stability in these numbers going forward.
Okay, sure. And just last one question on the lead margins. So lead, we have always been saying that 17 to 18 rupees per kg is the sustainable EBITDA for the lead segment. However, if I see the last 3 to 4 quarters, we have been delivering around 19 to 20 rupees per kg. So is that a sustainable change, or is it just the hedging gains which are playing out and the cycle can reverse and we can go back to 17, 18 rupees per kg?
No, so basically, yes, you are right. Earlier we used to have 17 to 18 rupees kind of a EBITDA margin for lead, but which we have improved because of the more volumes coming in, and we have improved from 18 to 19. So now we can say that the stable margins for lead is in the range of 18 to 19 instead of 17 to 18 earlier. So there is no impact of metal pricing in this lead piece.
Perfect. That's very helpful, sir. Thank you and all the best.
Thank you. The next question is from the line of Khush Nahar from Electrum PMS. Please go ahead.
Yeah, am I audible?
Yes.
Yeah, thank you for the opportunity, sir. I just wanted the percentage of domestic scrap collection that you have done for the Indian plants for this quarter.
Sorry, can you come again, please?
This percentage of domestic scrap collection for our Indian plants.
42%. Around 42% of the total procurement that we did was domestic scrap.
Okay, sir. Thank you.
But in terms of volume, it's around 50% year-on-year basis, increase of more than 50% year-on-year basis.
Okay.
Absolute numbers.
Yeah.
Thank you. The next question is from the line of Chetan Thakkar from Ask Investment Managers LLP. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yeah. I had just two questions. One primarily was on what is the underlying volume driver for lead in this quarter, and how should we see that going forward for the remaining of FY25?
So basically, the basic underlying factor is the overall procurement of scrap, availability of Indian scrap in India. So that is the basic underlying factor. And as I mentioned, that our overall scrap availability has increased, and it continues to increase because of battery waste management rules. So you can expect the similar growth numbers going forward also.
So this number is primarily from our anchor clients that is driving this volume growth?
In India, yes.
In India.
There is a growth in overseas numbers also. So as there is organic growth in each of the territories we are available, and some part of it in India is coming from these new battery waste management rules, regulations also.
Possible, sir, to break out what would be the difference between the two in terms of contribution to growth, or difficult to do that?
So you can expect around 8 to 10% growth coming from organic increase.
Mm-hmm.
And balance is coming from increase in domestic scrap availability.
Got it. And so in terms of the situation from volumes moving from Africa to Europe, where we are facing the Red Sea issue, how should we look at that from an FY25 perspective? Is that resolved and we should now assume volumes will start to inch up?
Yeah, we've already mentioned earlier also that these remain some temporary issues. Generally what happens is that either you shift to a new customer, that we've done, and in some cases the price of scrap in those geographies come down. So it's a combination of both of these, and now there is no problem for us going forward as far as Red Sea issue is concerned.
Understood. And the second question was on the depreciation line item. That has been a little volatile. So it moved up from 7 crore quarterly to 12 crore last quarter, and it's back to 7 crore. So what is the factor that drives this volatility, and how should we look at this?
So, yes, in this last year, in the quarter 4, there was some additional depreciation on account of some, we have a plant in Ghana where the currency was moving significantly. So because of that, there was a additional Ind AS which was applicable on this. So it increased the value of the assets of the company, and also consequently increase the value of depreciation also. So that was the reason of higher depreciation in that Q4 of last year. So, but there is sustainably, if you see, now whatever depreciation is there in this quarter, so that at the current level of assets, it is going to be similar. So that future, we will not see any significant volatility in case of depreciation.
And in case that inflation persists, then probably Q4 end will be generally the revisiting period in terms of what would be the asset value and hence consequent impact on depreciation. That will be a fair understanding.
So there was one-off case of approximately 3 to 4 crores that came in Q4 of last year. So I don't think anything coming in this year because, yes, you are right. Definitely we revisit every end of last quarter 4 of every year, but we don't see anything now coming up.
Got it. And the last question on the rubber plant, what will be the capacity in terms of TPD that we are setting up and the capex for that?
Rubber plant, we are expecting to start with for this first plant, we are expecting a capacity of 9,000 tons in India.
This is annual 9,000 tons.
Yes.
And the capex for this?
Capex for this is approximately, I can give you the number. Approximately 30 crores.
30 crores. Great, sir. Thank you so much for this. All the very best. Thank you.
Thank you. The next question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi, sir. What should be the volume growth this year?
Yes, so volume growth should be this year. We are targeting, again, we cannot say exactly growth for this year, but yes, on a 3-year basis, we are targeting 25% on CAGR basis.
Okay, but this year should be better than the FY24.
Year should be better.
Okay. And sir, lastly, what should be the tax rate for the year, if you could give a range?
Tax rate should be close to, again, 10 to 11%, which we normally have certain exemptions in overseas and India also. So for next 2 to 3 years, it is going to be in this range.
Sure. Thank you, sir. All the best for the quarter. Thank you.
Thank you. The next question is from the line of Astha from Pekde Advisors. Please go ahead.
Hello. Good afternoon, everyone. I just wanted to ask the management one question. First, from which quarter can we see the volumes to start rising for plastic and aluminum segment?
So in aluminum, you can see the rise in volumes coming from Q2 at the max from Q3.
Okay, Q2 to Q3. And for plastic, sir?
Volume from next quarter itself. Plastic is going to take a little longer because it's a little different in the sense that still the implementation of EPR is going to take some time as far as consumption of recycled plastic is concerned. So, and development of plastic product also in the organized sector is going to take some time because it's not like metals where you can just produce it and you can use it as a recycled product. Plastic is going to take some time longer. Probably by the end of this year, you will see the growth coming in plastics also.
Okay. Got it, sir. Thank you. That's all from my end.
Thank you. The next question is from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Hello, sir. Thank you for the opportunity. Capacity utilization rates hover between 55 to 67%, and this quarter it was very good. So, wanted to understand first, how much of that was because of the pent-up demand which was not executed maybe the next previous quarter because of the geopolitical reasons. Also, a long-term vision, you mentioned around 70-75%. So, do we face any constraints in achieving 100% capacity utilization because of any bottleneck in the process? What do you think about that?
No, actually, it all depends on where the scrap, because scrap is not something that comes in a constant manner, in a linear manner. So there are some problems in achieving more than 70-80% operational this thing. But with more Indian scrap availability, the total capacity utilization in India is definitely going to go up. So that is what is going to be the factor in the long term, where we expect the domestic scrap to be to the tune of around 70-80% of the total Indian business. So that is one area where we would get higher capacity utilization. And then in other verticals like plastic and aluminium, the capacity utilization is still at a very low percentage. It will also increase going forward when, for example, in aluminium, we are not going in for 100% capacity utilization because of no mechanism for hedging for that product. So it will take some time. As and when these things, the hedging mechanism comes up, you will see increase in capacity utilization of aluminium also. So in the longer run, definitely 75 to 80% capacity utilization is something that is very achievable.
So the supply of enough scrap is a constraint, right, for us achieving a higher capacity utilization, and not the demand from the manufacturers, right?
So what happens is that because ours is not a very capex intensive business model, so we keep higher capacities because, as I mentioned, that it's not a linear flow of material. So generally, to make sure that if there is additional quantities of scrap available, we can process that also. So we keep a higher capacity always there. But with domestic scrap and with long-term agreements with OEMs, we can increase we don't have to increase the capacities in the same ratios as we used to do earlier.
Okay, got it. Also, sir, how do you calculate this utilization rate? Because I understand it's a blended utilization rate. So can you give some idea on how is the utilization rate across lead, aluminium, plastic, and other commodities?
Yeah, just one second.
So, yes, lead is close to 70% at this moment for this quarter. and aluminum is close to 45%, plastic is again 40%. So blended comes to around 65-66%.
And copper?
We don't do copper.
All right, sorry. Also, I wanted to understand what is the lead capacity utilization of Chittoor plant, if any idea on that front, because, OEMs are also coming up with the capacity. So, what are you seeing on that front?
67. Yeah, Chittoor plant capacity utilization is close to 67-68%.
And it has always been like that in the past as well, and you expect the same in the future?
Yeah, on an average, it is in the range of 65-70% for lead.
Okay. So also on the lithium-ion front, right? So what is the typical scrap rate per battery from EVs and versus the lead-acid battery? And what is the kind of regulation on lithium-ion battery recycling? And the kind of recycling which is happening in terms of tonnage for lithium-ion across India and globally right now and maybe 5 years down the line?
Actually, the prices of these battery depends on the what type of batteries are the lithium-ion battery. Though there are one thing called LFP batteries and another is nickel, molybdenum, cobalt batteries. So the price varies. So as low as from 90 rupees kg to 250 rupees a kg. So as of now in India, the battery generated is mostly from the mobile battery or laptop batteries, which are still not able to collect it. They are lying with the consumers only. So once the EV batteries start coming up, then we will have certain price. As I mentioned, LFP should be somewhere around 100 and NMC should be somewhere around 250 rupees a kg.
Also, what is the kind of recycling happening, right, in terms of tonnage across India and globally for lithium-ion at the moment?
Indian recycling happening mostly in terms of black mass conversion, and this black mass is being exported to the countries where they are converting to metal for hydrometallurgy process after. Because India, nobody is producing cells. We are importing cells in India and the batteries are being assembled through cells. So as of now, China, Korea or other European consumers are there who are making cells. So the volumes are at pilot stage, not big commercial level. Maybe you can say on maybe few thousand tons per month.
In India?
4,000 tons per month maximum.
In India, right?
In India.
And globally, what do you think is the number the number of tons lithium-ion recycling?
See, you must understand that the actual volume of lithium-ion battery even globally would start coming in the next 3 to 4 years.
Correct.
It's still too early because the actual usage of these EVs have started only taking place 2 years back. Before that, it was only probably Tesla and some companies in China that have started. So even if those capacities are there currently, in future those capacities will fall short. Just looking at the numbers of the overall growth that has taken place in EVs in the past 3-4 years.
Also, what is the recycling demand across commodities? You mentioned you have lead, aluminium, and plastic. So recycling demand across commodities in India, and how much recycling needs to happen in organized sector as per the regulations for each commodity? I want to understand what is the market, especially for the aluminium and plastic.
Yeah. So if we talk about aluminium, India is net import dependent because Indian generation is hardly 5% of our total requirement of aluminium scrap. Country imports around 1.7 million tons of aluminium scrap, and the rest is being met through domestic. So you can say import dependent industry. So it's quite fragmented where a lot of people are importing and converting them into alloy and other material for second industry. When it comes to battery, particularly lead acid battery, so the recycling happening because it's generated from the post-consumer. So most of the recycling is happening through informal sector, or when we say formal informal sector, so that is around 55 to 60%. And slowly with this regulation, it will shift to formal and organized recycling. That is happening in case of lead. And when it comes to plastic, so the post-consumer plastic like MLP or which is going to dump or single-use plastic, that is not for the recycling purpose, but other plastic like higher grade plastic or PET, that is being collected, that is being converted into PET flakes, and their rate is quite better as compared to other part of the country, because we are able to collect good amount of plastic in India.
Thank you. The next question is from the line of Shivam Dave from Prodigy Investments. Please go ahead.
Yeah, hello. Am I audible?
Yes, please.
Yeah, congrats on the great set of numbers. I just wanted one clarity on the aluminum volumes. I think in Q4 call you were telling about a 60 to 70% utilization for FY25. Is that something that we can achieve this year?
Yes, we are targeting around that only. So the capacity utilization will improve if the hedging mechanism is there. So we are expecting that hedging mechanism to happen in this quarter. After that, we can probably take it to the optimal level of capacity utilization also.
Okay. And on the depreciation front, can we expect the current run rate for the whole year, or is there going to be some fluctuations in it?
No, it is going to be constant from here on. Of course, the more you put in capex, you will see a higher depreciation in absolute numbers, but you can expect a similar numbers going forward.
Right. Okay, that's it from my side. Thank you.
Thank you. The next follow-up question is from the line of Meet Bharatbhai Rachas from Anubhuti Advisors. Please go ahead.
Yeah, thanks for the opportunity again. So my question is in terms of working capital cycle. So basically, currently bulk of the working capital goes to inventory. And the current working capital days is around 80 to 85, and our medium-term target is 65 to maybe 70 days. So just wanted to understand the roadmap of maybe a reduction in inventory days in next 2 to 3 years. How are we going to achieve that?
So exactly in the next 3 years, we want to bring it down to around 65 to 70 days. And this is going to happen because of more domestic scrap availability, which is kind of tolling. Although the inventory, you would see the number of days of inventory would be same, but on the other hand, you will see payables also. So the more tolling business we'll do, the less overall working capital requirement would be there. So it has already started happening, and in the next 3 years, we'll bring it down to around 65 days.
Okay.
From the current around 85.
Improvement would come from higher availability of scrap domestically, right?
Absolutely, yes. Because currently a lot of our material comes from overseas, so there is in-transit inventory proportionally, which is very high. As and when we keep on increasing the domestic scrap, that percentage-wise that will come down. So overall number of days will reduce.
Sorry. Please go ahead.
Yeah, please continue.
Out of the 80 days of inventory, how much would be from in-transit inventory?
So in-transit inventory takes approximately 45 to 60 days. Whatever goods are coming from overseas to India, that takes 45 to 60 days. So that proportion of the in-transit inventory will go down.
And here also you have to understand that in some cases you keep that inventory. If you're buying from your own yard, you will be keeping that inventory for around 15 to 20 days in those yards also. And then also if you buy from some aggregators sometimes, then you'll have to give them in advance some money. So the overall period would be around 60 to 90 days. From advances given to the time it reaches your factory.
Okay. Understood. Yeah, thank you.
One more thing I would like to mention here is that because we are into scrap recycling business, so one more theory we have is that we don't say no to the scrap, because even if we don't have enough capacity, we will keep on sourcing the scrap, because that will not come back if we lose that. So we'll keep on increasing the capacity wherever required. But yes, on the other side, if we have the more inventory also, we would be happy to increase the capacity. So that is the one more concept we have for the growth.
Understood, sir. Thank you.
Thank you. The next question is from the line of Omkar Mistry from AUM Advisors. Please go ahead.
Hi, good afternoon. So am I audible?
Yes.
Yeah, so my question, can you please explain me about the tire or the rubber business model? I mean, what would be the byproducts and whom we are going to sell, and the basic around the model?
So in rubber or tire, we are also currently doing recycling in our overseas plant, where we are making pyrolysis oil out of it primarily, and using it for our own captive consumptions in our smelting and aluminium refining processes. So that is one part. So we also have a plant of rubber recycling which produces pyrolysis oil based on new technology of continuous pyrolysis in India. But we are also putting up a plant to make crumb rubber initially, and will go into value addition in that segment also in future, where we'll try to find out a solution to use the same material in tires in future. So it's both. So in rubber recycling, we'll be going into tire to tire or circular economy also, and we'll also be going into for pyrolysis oil production simultaneously.
Okay, and what's the scenario about the availability of the tires in India?
So availability of tire in India is there, but we are also targeting import of tires from various locations across the globe for our operations in India.
Now the EPR concept is also working well for India, where they are coming up with the credit mechanism where we can buy the local tires, and there will be some credits generation will be there by the recycler, and the tire manufacturer have to buy that those credits. So that is also working well for giving us more value for the scrap.
Yeah, got it. Yeah, thank you so much.
Thank you. Ladies and gentlemen, we'll take this as a last question, and I'll hand the conference over to the management for closing comments.
Yeah, thank you everyone for participating in this call. We trust that we've addressed all your queries during the session. However, if there are any remaining questions, please feel free to reach out to our investor relations team. Once again, we extend our gratitude to all the participants for joining us today. Thank you and have a great day.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.